right, so my next guest today, Heather Dreves, is coming to us from Secured Investment Corp. Excited to have her on the show today. I'll let you introduce yourself, Heather. Give us a little bit of your background. Tell us how you kind of got to where you are today.
Absolutely. Well, first of all, thank you for having me. I'm super excited to be here. It's interesting. I have been in the private money industry for almost 20 years, probably a little longer than that. And I kind of fell upon it by chance, to be perfectly honest with you. My husband and I were business owners and started to go a different direction with what we were doing. We were actually focusing around indoor soccer, crazy enough. And I knew someone in the private money industry, and on a whim, he and I had been in a sales position together previously, and he said, "You should come aboard. I really think there's some opportunity here." And so just kind of got involved at the ground level with private money, really went in assisting loan officers, quickly decided I wanted more than that, transitioned into helping our escrow department, learning how to do closing docs, escrow accounts, service accounts. And then I actually got my securities license and decided I wanted to raise capital. So it was just this natural, transition from starting at the ground up and realizing there was just so much opportunity and so many different ways you could be involved with it. And just really found that where I felt fulfilled was helping people create wealth for themselves and their family by investing in alternative investments. So that was really my path to where I am today.
I love it. You guys have taken a completely different departure from where, like, my background. We did single family fix and flip for over a decade, and we did, tens of millions of private money, but it was very, I don't want to call it casual, but it was very like, it was friends and family and referral based, and it was direct to the deal. And it sounds to me like you guys are way more structured. Obviously, it sounds like you're arbitraging the money and helping people get involved in outside deals and that type of thing. So how did that structure evolve? Like, was it built when you got there, or did you help create that thing, or how does that work?
Well, that's a really good question. And when I came on board, I joked that I dialed for dollars, because you're exactly right. Yep. Private money historically has been very transactional. Hey, I've got this guy that needs to borrow money that's fixing and flipping a property. And oh, by the way, I know a guy that has capital that's looking to deploy it and, likes the asset class of residential real estate. So I'd get on the phone, it'd come out of underwriting, and I'm dialing through my list. Hey, John, I got this deal. Great. Send us the money. We'll make sure, you're well secured. And it worked. I've been with the company Secured Investment Corp over 10 years now. It was clunky. It was frustrating if you're a real estate investor, that when you have a good deal, you have to act very quickly.
Oh, absolutely.
You don't have time for the guy that is using his IRA funds to get his custodian to send the money. That's a 2-week process. So long story short, we realized as a company, it worked for us, but it was very, very clunky. It was clunky for borrowers. Lenders that were funding the deals felt a lot of pressure to make a decision very quick. So we decided 9 years ago that we were going to open a fund, and it kind of solved that problem. As long as the deal fit the guidelines of the fund, we could close quickly and we could close immediately. Then we could turn around and start to market that trust deed for sale. It gave us, our lenders, time to do their due diligence. We could get them the information they needed to make an educated decision. Then once they committed to the deal, we would sell it, recoup our capital, then we'd go fund more deals. And so that's kind of how we evolved into a fund management company. We still sell trust deeds, but a lot of our lenders like the fund. It's a little more passive. They can just park some money. It's diversified. It's not just in one deal, but it's kind of nice that we can actually help everybody. Everybody has different appetites as far as what their investment strategies are. And so that's really where we evolved into a fund management team.
Yeah, no, it's really interesting. And I guess on the investor side, you guys kind of consider yourself like a blend between private and kind of hard money. What does it look like on the acquisitions? Are you guys doing appraisals and underwriting? And, how long does it take to get a loan, I would say?
What's interesting, I don't know what your experience has been with appraisals lately, but over COVID and the last 12 months, appraisals are somewhat of a nightmare. And historically, we've always just relied on appraisals. And when we were presented with these challenges recently. I mean, we were waiting for appraisals for 6 to 8 weeks, and borrowers can't, these
Yeah.
sellers are urgent. These are off-market deals. So we actually recently started inquiring and looking into hybrid products that are not necessarily a full appraisal. So we do still get a full appraisal, but we also have a hybrid product that is a outside company that goes out. They do take interior pictures, and that's our biggest concern is we want to know what that property looks like inside that house. So we do still get that, and honestly, the values that we get are probably more conservative with our hybrid product, which we like as a lender, and as a fund manager. I would rather err on the conservative side than have an inflated value. So we do both. We do require full appraisers. I can tell you right now, we can close loans in 2 weeks on a project, as long as the borrower gets us, the documentation we need, and we can get title. Title also sometimes takes a while. And then with this new hybrid product, we can have that back in 5 to 7 days.
Something you said there, Heather, which I really love. I've been saying this throughout COVID, and I heard this early on, very early on. I think actually it was ironic because I think we were talking about Ed Milet before we hit record. Ed Milet said this early on. He said that a lot of times these big adversities like COVID come into our lives, and they prove to us some of the things that maybe we should have been doing all along. Like, they create this adversity, they force us to course correct or pivot or make a change in our business. And then you look at it and you say, well, man, maybe I should, that's an efficiency that I maybe should have had dialed in all along. And that's an obstacle or a roadblock, like appraisals, that's a weakness, right? And now I can find a way to make it a little bit better, a little bit more effective. Has anything else like that kind of hit your industry lately that you guys have found that you could make a little bit more effective or efficient? Like, for example, going virtual in your office or anything like that. Have you guys seen that in the last 18 months that has made you quicker, stronger, faster?
We have. The other side of our company is a real estate education company. So we have a series of events, and we used to put these on in person. We'd probably put 3 to 4 on a month, educating people everything from just how to be a real estate investor, how to find the deal, how to source the deal, how to make an offer, how to rehab it. There's quite a few different programs. And we were very limited, right? Because we had to physically send out teams to these events nationwide, put on events, rent a ballroom, pay for travel. Well, when COVID hit, as a company, that was a huge part of our revenue. So we were somewhat in panic mode. We pivoted like that, and we went live. We now put on 4 events a week, and it has changed. And you're exactly right. Like, I think you get stuck in your ways where, well, this is the way we've always done it, and this is the best way to do it. And that's not actually always the case. And our company last year through COVID had the biggest revenue producing year it has in the history of the company. Through COVID. I mean, we still had our events. We still lent money. We never stopped because we don't rely on Wall Street money. We raise our own capital. And we had more investors looking to invest money with us, pulling out of the stock market, taking their destiny in their own hands and realizing, some of them lost jobs. They weren't working anymore, and they quickly decided, I need to have multiple streams of income. Great, you have a 401k. Let's help you get that rolled over and start generating passive income for you. So you hit the nail on the head. I mean, it was eye-opening for us as a company.
Yeah, I think it's so it's almost like this double-edged sword. It's hard to not take the focus off of certain industries that really couldn't course correct. Like, you have all these restaurant industries that were hit super hard, and like, look, if you're in a hotel and you're running a restaurant, like, there's no pivot for you, right? Like, you're shut down. There's laws that keep you from doing business, but there's also this sense of, okay, there's a lot of businesses that did so well because they were given PPP loans and they were just given all this money. That's not really what happened. You see a lot of companies that did so much better because of things you just mentioned. And that's the message that I want to make sure that our listeners are sharing and they're understanding, is that there's so many great producers and entrepreneurs out there that made great moves during COVID that allowed them to create these exponential jumps. And that's what's important to understand.
Yeah, no, I couldn't agree with you more. I mean, I've been here a long time, and when I started with the company, we had 20 employees. and quickly became a fund manager. And we now have over 100 employees. During COVID, some of them went remote. We also realized we also used to be very stuck on, if we hired someone, they needed to physically come in the office. That was just our motto, and it was just how we thought as a team. But we also realized opening up that door to remote work, not that everybody has that opportunity, we were able to attract more talent outside of our local market. So tons of life lessons through COVID. It was not a bad thing for us. Not that our company was in a bad place before, but we're just so much more efficient, so much more profitable. And I think that the clients that we work with are looking for those same things, right? We deal with people that were active real estate investors, owned a bunch of rentals, and now they don't want to do that. They don't want to be fixing and flipping. And so we have opportunity for that through our funds. They can invest money in our funds. They can buy trust deeds. So, honestly, we talk about here, our motto is the circle of wealth. And so we have this big graph, and, just because you don't have $100,000 to start investing doesn't mean you can't get involved and get to that point. We want everybody to get around to this side and become an accredited investor. And there is opportunity at every level here to do that.
I love that. And get a little deeper to the audience here, because I know you do have different types of funds. First of all, if you could just give the audience like a 10-second tutorial on what an accredited investor is. And then I know that you have opportunity for people who are in that space and then people who aren't, right? So give us the differences.
Sure. So the SEC's definition of an accredited investor is a individual or a married couple that has $1 million in assets, excluding their primary residence and excluding any liabilities that they may have. Or they can qualify as an accredited investor through their income. So if they have $200,000 a year as an individual or $300,000 as a married couple for the past 2 years, they would be considered an accredited investor. And we've always had funds for accredited investors. We felt we were doing pretty much the general public a disservice. Why should only the wealthy be able to invest in this type of investment? So 3 years ago, we opened what's called a Regulation A+ fund. And that just means that anybody can invest in it. And we have a real estate fund that is managed exactly the same way our accredited investor fund is, other than the fact that you don't have to qualify and the minimum is $1,000. So that fund is really good for people with self-directed IRAs, self-directed 401ks. A lot of people are starting to move those accounts away from money managers, financial advisors, and really take their destiny into their own hands, and I love that. And so small balance IRAs, I talk to people all day. I've only got $6,000 in my IRA. I don't know what I could possibly do with it. Put it to work. Our Regulation A fund earns 8 to 10%. I know people aren't earning that on a CD right now. So, that's where that kind of came from and evolved from. And we've just had tons of interest in our Regulation A fund.
And in that fund, should people expect a certain amount of time that it's locked up? Is it like a CD? Do they have to invest for a certain period?
Yeah, there is a tie-up period on that fund, and it's 12 months.
Okay. So it's better than a CD. You're not getting a bank a CD for less than 12 months, and you're certainly not getting 8 to 10% on a CD, right?
No. And earnings on that fund are paid out on a monthly basis. So for the individual that's looking for cash flow rather than growth, there's opportunity for that. But the neat thing about our fund too is you can actually roll your earnings and put it in growth mode. So I have a lot of people that, have invested their kids' college accounts, or they're not retired yet. They're just looking to just continue to grow that nest egg. A lot of times, more often than not, they'll just put it in growth mode where they just roll their monthly earnings and their equity. It's compounding, right? It's the compound effect.
Awesome. So where do you guys find the investors that you work with? Is it a certain area? Are you guys all nationwide? Like where's the concentration of the operators that you're lending to?
Yeah, well, that's interesting because a lot of them are organically produced by our company. So a majority of them come from our events we put on. So we teach people how to find the deals, and that's really where our company got started. Is all these people had this information, they knew how to find the deals, but they didn't have the funding. So that's where the missing component was. So we added the funding piece to it. So a lot of them come organically from our events that we put on. We also have a broker program. So we teach people how to be a broker. a private money broker, almost like a bird dog. They know people that are looking to borrow money. They broker the deal to us, but we also do a lot of retail. We joke around here. People will ask new employees, what do we do here? And, oh, well, we're a lender and we're an education company. And the standard answer should be that we're a marketing company. And so we put on tons of webinars, tons of podcasts, social media. We have quite a marketing team. So, but a bulk of them come from internally. We have this constant deal flow from clients.
Love it. Love it. And so what do you guys see as your next growth mode? Are you guys looking to expand? Are you looking to help take on new industries? Are you looking to stay in residential? Like, what do you think is the next move?
So one of the things that we practice here is we practice what we preach, and we teach people and we focus on investing in single family 1 to 4 unit residential properties. That's our niche. So we will continue to focus on that as far as, from a lending perspective. Where I see some growth for the lending arm of our company is offering some rental programs. The biggest question, when are the markets going to shift? I don't know that it's a matter of if they do, but they are going to. And I think there's going to be a lot of opportunity for investors to own rentals. And so we want to provide a funding source for that. So right now we're about ready to roll out a rental product, which is a 5 or a 10-year balloon with a fully amortized 30-year product.
Wow.
And it's not traditional banking. It's more private money, but rates like 4 and 5,
Wow.
which are great. So that's where I think the lending side of it will grow, and be able to continue to service our clients that are maybe not all fixing and flipping anymore, but buying and holding. I think that we have an acquisition team, and so we have a team of individuals that buy real estate in our local market, which is Coeur d'Alene, Idaho, #1 on the Wall Street Journal to live, and Spokane, Washington, which came in 5th. And so there's a lot of opportunity there too. They are lifting the foreclosure moratorium in September. And when that happens, there's going to be a lot of opportunities. So we are raising capital now to take advantage of those opportunities. And as we raise capital, our fund members make more money because we can buy more properties, lend more money. So I think that's probably the main focuses right now.
Fantastic. So Heather, if you had a shortage of deals or investors, which one are you short right now? Which one you'd rather have conversations with?
That's a constant battle. Either you have money than you need, or you don't have. Honestly, right now we don't have a problem of either, and I can't say that I would want one or the other. Our biggest concern, and we've had a lot of interest raising capital probably over the last 12 months, like a lot. Because people are just, they're rate driven, they're starved, they're looking for yield, whether it's Wall Street money or individuals. But we are always mindful as a fund management team that we have to be able to deploy that capital. That's the worst thing we could do as fund managers, is raise a bunch of money and not have anywhere to put it to work. And so we meet as a team probably 3 times a week on originations, properties we're buying, and capital we're raising. So there's 3 of us that are the main fund managers, but then we have this massive team behind us. But that is always a topic of conversation. Great. We need to keep up with the pace of capital raising as far as deployment goes.
I love to ask this question to all my guests. What is over the years, you've built this team 20 to 100 now. You're obviously, you've seen a great level of success, but what was along the way, you have to look back, what was your favorite kind of failure along the way, or biggest obstacle that you overcame and got on the other side of it and went, man, thank God that's over?
Well, one of the things that I can say that I think has made me, where I am today is my husband and I decided we were going to fix and flip a property. Our first one, this was probably 7 years ago. And just to back up my story, I've always been on the investor lender side. I work with the people that have money. So, you get a little jaded to that, right? So I decided I was going to jump in and I was going to do what our borrowers were doing. It's not as easy as it looks. We did not look like Chip and Joanna. And it took us 10 times longer than it should have. And the mistake we made was trying to do it ourselves. Not hiring it out, not just working those costs into our numbers. And I look at it completely different. Since then, we've flipped lots of other homes. We own rentals now, but that was very eye-opening for me. It's a lot of work. There's a lot of opportunity, but
yeah. No, I'm with you. And listen, I did it that way. My first 3 flips, right? And I've done 1,000 flips since then. But my first 3 we did physically by hand. And I look back and I think to myself, that was nuts. I think it's good if you do that to get your bearings and understand what it's like to do the work, but don't do that for long term, right? So, I like to ask the question, what's the one big thing you want to do? Before you leave the earth, and you said to teach your children to be financially free. How are you working on that right now? Because I know you got some grown children. What's the process look like?
Well, we've got a 23-year-old that's a fireman, which is a perfect opportunity to do the things that I'm going to talk about. And then we have a 21-year-old that's a college student. Really just teaching them not to rely on, someone else to create wealth for yourselves. It's important to have, like our fireman, he's dialed, right? He's got his pension, this, that, and the other, but you're never going to get ahead just doing that. You need to find multiple streams of income to create the lifestyle that you want. And if the lifestyle that you want means boats and 4-wheelers and toys, you're probably not going to be able to do that as just a fireman. And so just teaching them to not be afraid to take chances and opportunities and have multiple things going on. I wish I would have learned that a long time ago, and I think my husband and I have realized that there's so much opportunity in real estate, whether that's residential, commercial, self-storage. I saw that that's kind of your niche is the self-storage, and we're looking into that right now. But just don't be afraid. Don't be afraid to try things. I think if anything, COVID has taught kids that age is you don't have to just go the norm. And my kids both have went to college, thank the Lord, but doesn't mean that you get a great job and you make the money that you want to make. You got to be a hustler and you got to work hard, and you have to do it for yourself. Nobody's going to do it for you. So really just teaching them that.
Yeah, I love that you said that. Take the risk, take the action, go out there and execute. I think that's from the people that I get to speak with that haven't reached their true potential, haven't tapped into it, or haven't taken the action. That's always what it is. It's like they just haven't taken the step. And you're not going to get what you want to get without taking a little bit of risk and getting a little bit uncomfortable. So that's an excellent answer. You're spot on. Yeah. So, what did I forget to ask you today? What else did you want to cover?
I really just wanted to spread the word that, there is opportunity with our company. If people have these small balance accounts, to get them to work for them. I talk to so many people that think that they have to have, this large amount of money to start investing, and you can start small, and you have to start somewhere. So really just getting the message out to just start investing now, even if all you have is $1,000, it gets it going. And, it's not any different than just taking the risk and doing it. But just getting the message out that we have opportunities for non-accredited investors and also accredited to put their money to work for them in a asset class that's backed by residential real estate. I'm a firm believer that there's lots of opportunity and safety with that. And so if they are interested in getting more information about that, they can visit our website. We've got a pretty robust website at Secured Investment Corp, and they can get information about our funds, our trustees. They can schedule a call with myself or my team. Really, just here to help people and educate them also about self-directed IRA accounts. That's something that not a lot of people know about, just a lot of opportunity there. So, we're really here just we educate people.
I love it. And Heather, your depth of knowledge in the space shows, and just, listening to you, I know you added a tremendous value to our listeners today. I too am a huge advocate of self-directed IRAs. There's a lot of massive tax advantages, and you can also, potentially be completely tax-free in your investments. So definitely, guys, check out the website. We'll put a link in the show notes so you guys can click on it directly. securedinvestmentcorp.com. Heather, thanks for being on the show. Thank you for bringing value.
Thank you so much. I appreciate you letting me be a guest and, spread the word. And we'd love to talk with any of your listeners more.